end up with like just like this big shit show. Anytime you have a big gap, you fade off. So like kind of a flat open is actually really healthy, because with the flat open today, we'll be able to kind of make, be able to make a guesstimate and let the pattern build whichever way. The one thing we'll have to be mindful of is just not to kind of stay out of the open for at least the first like few minutes before you start piling in trades, because I'm actually not sure which way we go, which is, you know, hey, nice guru over here, right? But look, we're at the bounce point. We're at the 200-day moving average on the weekly. Stochastics even on the weekly is at 3. On the daily, I mean, we're at 5. Candles completely outside the, you know, the lower Bollinger Band. The technicals say we should bounce, but the price action says go fuck the technicals. Meaning, right, like you're just getting every single bounce get sold off in the market. Anytime you pop up, it's getting sold off heavy. It's a liquidation event that's just going on right now. You're seeing essentially, I mean, you can feel it, right, in the volume and stuff. I mean, this is margin call, liquidation, people jumping off the building type of action. That's okay. You know, these things pass over time. They never last that long. So what we'll have to do is let the kind of market show us which way it wants to go. Remember, the probabilities and the technical analysis tell us we are due for a bounce. Like, how much downside can you have? At least for 1 day or 2 days, right? But the price action is not showing us the signal yet to go long. If you add into the hole or you buy into the hole, guess what happens, right? You get stuck in the hole. So what we got to do is let this thing build a little bit. If the market does start to bounce, we will have chances to add and kind of build up into what we need to. And then we have to be prepared, right? Like if we get a spike up, you know, we may have to be prepared to, you know, flip this thing back short at some point. We are getting afternoon fades a lot. This action is nasty. For the most part, like if you're untrained or brand new, I mean, you're going to lose no matter what. I mean, if you're trained and, you know, proper, you're still going to have some trouble. But, you know, if you've been working at this for a while and you've been trained proper, then you're probably having your best weeks trading, you know, ever, or at least the potential for them. So, you know, just be careful, because there's always good markets, right? 52 weeks in a year. This stuff lasts for a month or two, but you still got the rest of the year to make money. But, I mean, you know, that's for most people, right? We're in the business of shredding. So, you know, we got to go out and make some money today. Watch list is really the same. You know, if we need to short, we'll play this TVIX. It's really long in the tooth. I hate to kind of chase this thing up at this point. Remember the breakout was at like 60, but it's been bouncing since 35. So we're really extended. It's really tough shorting stocks when the market has fallen so far. But like say, for example, on Friday, the market was oversold on Friday too, and it still dropped 650 points, and it was nasty out there. So like, yeah, we're thinking, okay, we have to bounce, but the price action's telling us something different. So the easiest way to start to tell and see like if something is changing is look at different time frames on the markets to start to see if the structure is starting to hold. What will happen is like before like a real big bounce happens, what you'll start to see is on smaller term time frames, like look at a 30-minute chart or a 60-minute chart. What you'll start to see is on, you know, smaller term time frames, you'll start to see like a change in structure where you'll start to break over MAs and start to build here. You can see like right now we're just kind of fading off at the 20 MA and the 90 MA on the 30-minute chart. And, you know, if we could kind of peek over that and build, like ideally you pop back and then you retest, that's going to be probably, that's going to be, you know, your telltale signal over there. You can see on the hourly, like we just haven't even, since really the 13th, right? We haven't even kind of peeked over there. If anything, lately, the last few days, right, we've been a 90 MA D-rider down here. So just keep an eye on like your 30 minutes, your hourly. But remember, those are your smaller term time frames. What you need to do is kind of match them with what's happening on the big picture time frame, which is right, you know, on the weekly, you're on big support. But now remember, your 200-day moving average is just imaginary damn line, right? So for the most part, like, right? When you have selling, supports don't mean shit. Remember that. Supports are awesome for bull markets because you get like a breakout and a pullback to support, and there's actually like real buyers there. And bear market trading, supports are just areas that get shorted. So, you know, if we don't kind of rip off this level or start kind of building something around this level, then you already know, right? Like, okay, we're not ready to bounce yet, and we'll have to kind of tie it the other way. In terms of your watch list, like, just keep it super simple. I just got ETFs. Look, these ETFs are all the same price as freaking small caps at this point, right? Right? A couple more days, and these things will be teeny boppers. So, TQQ, TNA, you know, granted, like, nobody wants to play these things when they're $100, but, you know, now they're going to be just as cheap as small caps. SQ still, you know, this Roku's popping on an upgrade. I was kind of thinking on this on two ways. Like, you know, if the market does roll, then maybe you got some upside on this one with the gap. But the other side I was thinking on this is if the market kind of dips back down, stocks in bear markets, they get boosted on upgrades, are usually they just get shorted. They get rolled over because the analyst does the upgrade as like a liquidity event, right? They say, oh man, right? Like my buddies are all holding this the bag on this Roku. Let me put the upgrade on so they can sell out, and then the thing rolls back over. So if the market goes back red, and you start to really see that flush coming in, then, you know, we got a little bit of upside to short on this thing because they gapped this thing up like 7% pre-market. Never know with that bad boy. You're starting to see some strength in NVIDIA here today. This thing is obviously super oversold also. And then, you know, Labu's like our daily deposit to the market gods. You know, we try to bounce this thing like 4 days in a row. And we're mostly shorting. You know, 95% of our trades have been shorts. But like every day, like when the market turns, we kind of make a daily deposit to the Labu gods. You know, try like a couple hundred shares to see if this fucker bounces. And it never does. Never does. So go figure. That's just the name of the game right there. But I fully suspect with the market kind of coming up, bouncing up a little bit, we'll make our daily deposit to the Labu gods. Once again, there's really no good gappers that like I'm interested in today. You know, you're starting to see like a little pop in this like shit like NBEV, but once a stock is broken out of its trend like this, you can't really trust. See, this is like a trend, right? So once you've cracked your trend, you can't really trust that first bounce. That just ends up being a lower high that gets shorted. So you got to kind of take that with a grain of salt and just leave it alone, right? When a turd is done, then it's just done for a while, right? Then you need like some basing action and stuff like that for a long time. That's why they're called turds. And so this one will probably have to come back a little bit for a few days and then base out for some time to heal, and then you can come in and play this thing back the other way. But otherwise, we got to leave this thing alone. Guys, there's no point of getting too fancy with their watch list and having just crazy stuff on it. Right now, the market is about one thing: risk management, protecting your money, right? Your trade management, trading small. Let the volatility and the market give you the range, but you're going to trade smaller, right? So like if you were normally trading 1,000 shares of stuff, right? Well, the market is like 3 or 4 times more volatile than normal, so trade a few hundred shares of stuff. You'll still have the same ability to grind out the same type of profits you were doing, but with a lot less share size. One mistake I've made in the last few weeks just going through my trades is like sometimes I see a hot setup and I want to go in full size, but then what's happening is, right, like you're getting so much volatility even inside like each individual candle that you can get yourself shaken out. You know, like on Friday, you know, we were playing this TVIX, and you can see like kind of what happens here. The market's so oversold that it just doesn't want to like give us the rip, but like it's still going down slowly. But like you can see, like, you know, we kept thinking like, okay, like if you just kept adding at highs on breakout, like what would happen is like you would just pop up and then come back down. Remember, like in this type of market, you want to be scooping these things on dips, selling into the breakout. And you can see like now you popped over highs, and then like the next candle you came back down, right? And then you kind of keep popping over these highs, and like you tail out there, right? and you're thinking like, oh shit, it's over high, and so like it's gonna break out, and then it comes back down the next candle. I mean, these candles here like $1, $1.50, right? And so the range on the candles is so big, and so if you're rolling in, say, 500 shares at the high, well, inside the range, if there's $1.50 of action, right, you could be down $750 really, really quickly. And so what you need to be doing is having really precise entries, but then trading, you know, a little bit smaller. You know, like 2 weeks ago, you know, I was adding like 500, 600, 700 shares of this. Granted, it was cheaper, but, you know, Friday it was like 200 shares, right? You know, even adding like 100 at a time to kind of build up into it, because the range on it's just too aggressive. You know, just a little word to the wise. When you're oversold, don't chase any breakdowns at, you know, the low of day or high of day. You know, if you're going inverse ETF, right? Play around with the good entries, and you guys will be okay. Protect your profits as always. Let's go do what we got to do. As you guys, I'll be live all day tomorrow, so I'll see everybody over there. As always, give me a thumbs up if you like the video, and let's go have a little bit of fun. I think we got a few webinars scheduled this week and next week, so, you know, we'll all be spending a lot of interpersonal close time together and get to know each other real well. Well, I think we already do, but you know what I mean. Let's go do what we do. Be good, be great. It's freaking Christmas, right? Y'all deserve, you spent all this money eating all that nasty food. I bet all you guys are just stuffing yourselves with ham and all sorts of nastiness. Not me. I barely ate anything. I had a couple wines, hit the beach like a man, and cruised around, and that's it, right? I'm ready to go. We got to make some money. Make that money back that you spent on those gifts. God knows nobody's probably grateful for them anyways. Let's do this. We got money to make, guys. 2019, big year. All Day is turning 30. I'm turning 28. Brad Young is turning 50. And we got things to do. I love you guys. Today is our day. Let's shred. Let's go do what we got to do.